Hey, everybody, welcome back to the show. Today, I'm interviewing my buddy, Paul Lizell. He's actually a virtual investor mostly now. He's been investing all over the country. I think he has done deals in like 40 states at this point. And we've been friends for a number of years. He's a member of my Investor Fuel Mastermind. He's done over 1,000 deals, way over 1,000 deals at this point. And he started investing almost 20 years ago and has been through some market cycles before. In fact, kind of like Paul, like myself, we really kind of cut our teeth in a serious way during the last downturn in the market. So guys like us have been kind of looking forward to a down market. Nobody knew it would happen the way that it has. But today we're going to talk about kind of lessons learned through investing in a down market and the opportunities that presents. Professional real estate investors know that it's not really about the real estate. In fact, real estate is just a vehicle to freedom. A group of over 100 of the nation's leading real estate investors from across the country meet several times a year at the Investor Fuel Real Estate Mastermind to share ideas on how to strengthen each other's businesses, but also to come together as friends and build more fulfilling lives for all of those around us. On today's show, we're going to continue our conversation of fueling our businesses and fueling our lives. I'm glad you're here. Hey, Paul, welcome to the show, buddy.
Hey, Mike, thanks for having me. I appreciate it.
Yeah, good to see you. So for those of you that are not watching right now, Paul is at the beach. You can see the waves and the palm trees behind him there. So yeah, not quite. We know that's a backdrop, but it makes it feel like you're a little less locked down right now, right?
Exactly. That's why I have it going, man. It keeps me going.
Yeah. So Paul, you started investing in 2001. So, almost 20 years ago. And I know you kind of ramped up. Everybody starts a little bit slow and then ramps up.
Totally.
But, I thought it was kind of good to talk to somebody that's been through a down cycle before and to talk about the lessons learned because, you can apply a lot of what we've learned during other down markets to. Now, the truth is at the time we're recording this, I would not call this a down market yet, but I think we're anticipating that it probably will start to shift that way, right?
Yeah. The realization hasn't hit people yet, just what's going on, just how many people are unemployed, just, how many less buyers are going to be out there.
Right. Yeah. Retail buyers for sure. Yeah.
For sure.
And then of course, whenever the market is, whenever there's so many unknowns, the financing kind of dries up because they don't know what's going to happen yet either. So stuff is still actually moving pretty good at this point, but there's just a lot of wait and see what's going on.
There is. I call this the great pause because we don't know what's happening.
Yeah. I referred to it the other day, and I got to say I stole this from somebody else. I can't remember who I saw it from. I was referring to it as the Great Suppression.
That's I like that analogy better.
Yeah. So maybe before we jump in, tell us about your background and kind of how you found your way into real estate.
Sure. So I started investing back in December. I bought my first deal back in December of 2001, but my foray into real estate investing was before that in the 90s, working for my uncle. I was doing contracting work for him while I was in college during the summers and during off times. And he would buy these multi-unit buildings. We'd fix them up, renovate them, and he would rent them out. So that kind of got me interested in real estate from jump, how you could, buy a property cheap, fix it up, rent it out, and make cash flow off of it. So that had my interest, but my interest wasn't as much in that as it was to fix up and resell for the immediate cash. I wanted a big bang. You're broke when you're in college.
Yeah.
So I out of college, I had a job in banking, worked for a small community bank. I was a business development officer for, 4 years there. I was an underwriter for 1 year and then a sales guy for 4 years. And while I was doing the sales, I bought a fix and flip. Obviously, that first one there, and then in 2001. And I bought a couple more in 2002, 2003. I did probably about 3 to 4 flips a year and was making more money doing those than I was doing my job, of course, right? And built that up, did an occasional wholesale deal. And then we hit the crash in 2007-8 time period there where I pivoted my business. Pivoted from doing fix and flips to mostly wholesale.
Okay.
Right.
Before that you did, or
10% wholesale, 10 fix and flip. Pardon me?
You shifted to wholesaling before the last downturn, or as a
Right after.
response to? Yeah, yeah,
In response to. So it hit me
yeah,
so hard. I was out, like I'm selling properties for losses just to pay back private lenders. I want to sure I make them whole and
yeah,
get rid of all this stuff that was just a drag. And I decided to switch to wholesaling. Fell in love with it. The first couple of deals did during downturns, there's also great opportunities. And it was actually the best opportunity. That was a massive downturn. Picking up properties that were listed for 220, 230, picking them up for 90 grand, 110 grand, selling them and making $50,000 wholesale fees on them.
yeah, yeah. It's like that's what's going on right now. I think
Yeah.
people are, and this is what we're advising people to, whether they're coaching students in our Investor Fuel Mastermind that we talk about, is you got to do stuff that has a quicker cash cycle, right? Like,
Yes.
don't take on huge rehabs that take 6 months to rehab or whatever. Like, wholesale more. Do stuff that the cash flow moves much faster. That's a pretty typical, like that'd be some pretty typical guidance you would give your students, right?
Totally. The velocity money, move
Yeah.
it quick, get rid of it, make 20K on it as compared to fixing and flipping to make 40 or 50, right? Get rid of it and turn it over.
Yeah, yeah,
Less
yeah.
risk.
So yeah, so what are some of the big? Let's kind of get into some of the lessons learned kind of during the last downturn, which is when I started. I started in '08, so I didn't know. There's pros and cons of when you started. Like when we didn't plan it, people thought we were crazy for getting in at that time. At the time, we were like naive. We're like, "What are you talking about? This works," and so we didn't know. But the truth is it was actually a great time to get in. And some of it is we didn't have baggage. We didn't have old habits. We didn't have legacy inventory that was upside down or anything like that. We kind of came in and knew nothing and learned from there, right? And so whether you're in that situation kind of starting today or whether you've been around for a while, I think some of our lessons learned between the two of us that we can share with people today would be helpful. So let's maybe start with lead gen. Like, what happens during a market like this?
So this is great opportunity for people. And for you at that time when you started, it was great opportunity, right?
Yeah.
And we're going to be in a similar type of thing. It may not be as bad, right? It may be worse. We don't know yet. We just really don't know what's coming.
Right.
But what's going to happen is instead of people getting inundated with 20, 30 postcards on different property, they might only get 4 or 5 now. So now you have way less competition out there, and you have some people that'll just fall off too. So you want to be constantly sending your mail out, right? Be in their face all the time, to be branding yourself. It's a great time to brand yourself.
Yeah.
Right. So I think for the direct mail, that's your modus operandi there. And then there's also great opportunity coming, and actually in most markets, not yet, right? You don't have on the MLS an abundance of properties yet. You definitely don't in your Dallas market at all, right? You still got a shortage.
You're saying distressed stuff? Yeah.
Correct. The distressed stuff. We're not getting that locally in ours yet. I don't anticipate that till maybe the fall or the winter when people start putting properties back on the market. But if you do have to get rid of properties now, is I think a good time to get rid of them because people haven't realized just what's going on yet. But there's going to be great opportunity on the MLS, buying on online auctions, buying HUD, all these different properties. When I first started in this business, I can go on HUD Home Store and buy a property every week locally around me, literally buy a property, a good deal every week that could either fix and flip or potentially wholesale. Now we have nothing like that now, right? You have to really dig, and I'm going into more rural areas to find my deals, but there's going to be an abundance of deals coming up in the near future. So now if you're just getting started right now, great opportunity to get in, right? Learn, get a good mentor, and then you're going to be in a good position to buy, get in a good cash position, get some good lenders, some private lenders, and you'll be in a great position.
Yeah, there's a couple things that you shared there that are insightful for sure. Is that a lot of the competition goes away. We've already seen this. Our buddy Todd Swaggerty has seen it because he runs a huge mail house. We actually have an agency now called the Investor Machine where we advertise for people. So what we see and what Todd sees, what everybody's kind of seeing is like newer investors that were not really committed to the business are now on the sidelines. They're like, I'm out, without really knowing what they're stepping away from. Veteran investors are licking their chops saying, hey, all the newbies are getting out of the way now. Let's let the professionals handle this, right? And so that's one of the things that I didn't realize in '08. I didn't quite realize. I didn't have the hindsight ability to kind of look back and see, here's why that happened, or here's what I'll do. But I started to think about it in the context of what I'll do next time. So, it was like we started in the summer of '08 and kind of early '09. a lot of people that I looked up to or that I known in the business were either gotten, wiped out or moved to the sidelines or whatever. And a lot of it was driven by their financing. Their lines of credit went away, or they were stuck with a bunch of inventory that they were struggling with or whatever. But a lot of them stopped advertising. And so there was this month where we went, I don't remember the exact numbers. I think we were spending like $5,000 a month on advertising. And we went from one month to the next, we went to like 22,000. We just throttled it up and we crushed it. We just crushed it. And the next year we bought like 70 houses. And it was because all in DFW. And it was because, we just stepped into the void that was less competition marketing to customers. And so that's coming right now. A lot of people have moved to the sidelines. I don't know if you get a bunch of mailers and stuff on your rentals or other properties.
I do.
Other people are marketing. Like my PO box is a lot less full than it normally is because a lot of those newbie type folks that were hitting me before aren't anymore.
Yeah, I'm seeing the exact same thing. Postcards used to be in abundance. Now I'm getting very few of them. It really has dropped off over the past 2 or 3 weeks for sure.
Yeah. And arguably a time when more people will be motivated to sell. Like not that they are right now. I think there's so many uncertainties right now as we're recording this, but if you're a landlord, most landlords, this is one thing that a lot of people don't quite understand, is that most landlords in America own a couple properties. It's not like huge companies or hedge funds that own like thousands or tens of thousands. That happens, but the majority of rentals are somebody that owns one or two. And, something, they go through something like this, don't collect rent for a couple months. And you're like, this sucks. This was like a hobby and I don't want to play this game anymore. Right.
Yeah. They want to get rid of it at that point and they're frustrated and totally understandable. And they just don't know what's going on here.
Yep.
Unknown.
Yeah. So and an interesting thing is when did you move from direct to seller marketing? And obviously you moved into doing a lot of online auction stuff, a lot of online REOs, which is how you've been able to buy properties in over 40 states.
Yeah.
Right. So when did you make that move where you went into mostly online auctions?
So I pivoted 100% in 2013. The end of 2013, I went away from the direct mail. I was doing them in unison. I was buying bank-owned and MLS stuff and doing direct mail, doing both, right? Now, obviously, you're going to get a little bit better spreads on those direct mails, right, than you are going to get mostly from the banks or online stuff there. However, I just started to look in different markets. For me, I was just buying in different markets. So I didn't need to do direct mail locally for me anymore. I was getting enough inventory by buying all over the country, by opening up the whole country to my inventory, basically, more or less. So that's when I stopped. I used to do not billboard advertising. There was a company I used. It was third-party fill. They were out of Dallas, as a matter of fact. And when leads come in, they would allow like 2 or 3 people in a certain area. And leads would come, phone calls would come in, you'd be answering. That was one marketing source I had, right? Besides direct mail, we had that one. And of course, MLS and REOs. And it wasn't online. Auction.com was just being built out at that point. I want to say in around 2006, 8, somewhere in that time frame, they started to really come out and grow. And then other ones came out from there.
Yeah. So the interesting thing about that model is, I think I might, hopefully I don't missay this, is you were doing both and you said, hey, it's easier to buy these houses on auction because you opened up your world to the whole country effectively. Right. Probably minus a couple of states like California and some other states that, were not the most business friendly, maybe. Correct. Right. So I know you did that. It was easier to buy, but all along it's always been a little harder to sell that way, right? Because you're getting stuff in more rural areas. So the interesting thing is, one of the things we can move into is talking about exit strategies and dispositions, because that is getting harder again for people because a lot of, would-be buyers are going away. But you made that shift a long time ago into a model that was a little bit easier to buy and harder to sell, right?
Yes. It's always been harder for us to sell our properties just because more of them are in rural areas, right? So we had to get much more creative with our marketing. Besides just using Craigslist or Backpage or some of these other sources, we started doing direct mailers to cash buyers list. And then we started doing newspaper ads, right? We actually use newspaper ads, and believe it or not, they work. They work for old landlords. They work for places where there's not great Wi-Fi, right? And we have an older population, and it works unbelievably well. It's super cheap. Some of these things are $60 or $100 for a newspaper ad for a week or two, but we sell properties off of that. So that's something that probably very few people do. and
Yeah.
have any competition with that. So that's a big advantage, but that's usually in the more rural areas. But doing that may be important to do here in the future. Penny power could be a good one, right?
Yeah, there's some great lessons to learn from that because, just to extrapolate on just knowing you and your model, like for folks to understand this, is when you buy houses all over the whole country and they're in rural areas, like it's probably been it's probably uncommon for you to buy multiple houses in the same market. Like
Right.
you buy hundreds and hundreds of individual houses in a market that you've never bought anything there again. So you had to go find a way to sell that, dispose of that in a market where you had no buyers list, you had nothing. It's like, but you had a process for here's how we dispo houses in far off lands that we've never been to before, right?
Yeah, no, absolutely. And we'll do things, even a deeper dive. We'll do things like go on Craigslist, find wholesalers and call the wholesalers or call guys who are advertising we buy houses, find out if they're legit or not, kind of kick the tires with them, see if they've got experience. If they don't, we don't even bother with them. Occasionally do some joint ventures with them. But yeah, you got to really be creative. If we're in a lot of these markets, like we did one in Coors Gold, California, first deal I ever did in California. And we didn't list that on the MLS or anything. We just listed it on Craigslist among other sources and mailed to cash buyers. I think we sold it to somebody. It was a cash buyers list. Actually happens to be a big buyer in California in that area.
Yeah,
we did well with that, but that
but they don't buy probably on online auctions, so they never saw that deal, right? Yeah,
right. They don't. Most of these players don't do that. Most people just aren't comfortable with it. There's also big deposits. They want either $2,500, $3,000 down for each property. So it can get pretty costly. You can have a lot of money out on the street and just deposits, depending on how many deals you got going on.
Right. But yeah, the key is, without getting into a lot of detail, is how to go get creative and find buyers. Like, and some of it's probably property specific, right? If it's really rough, it's like this segment of potential buyers probably wouldn't be interested in that. Right. If it's like has a tenant in it already that probably needs to be moved out, but it's probably kind of rental ready or closer to it. Like, let's call some local property management companies. Let's look for rent ads on Craigslist or Facebook Marketplace and just say, hey, let's assume that they're a landlord and let's assume that they're always in the business of buying more. Right.
Yeah, no, absolutely. We have a guy in Shreveport, Louisiana, Roger Meir. This guy's got to be like 83 years old now. And he just keeps buying. So we get anything in around the area, he's buying, and his son is actively buying too. They're probably together on that. But if I find a deal, boom. For him, it's great. For when you have people like that in these different markets, you can just pick up the phone and say, here's the property, here's the lockbox, go check it out. Tell me what you think. But until you build those relationships, it's like you're in a new market. You're just starting for brand new. It's like I'm a new investor again, but I know how to market to these different areas.
Yeah.
We learn how to do that. All of our marketing is disposition marketing, which is way cheaper than the acquisition side marketing.
Yeah. And I think you just ask yourself, like, who would buy this house? Like, who is my potential customer and where are they right now? Like, some of them are using a property management company to manage that. Some of them are posting ads to buy, like they're trying to buy there. They might also be, they could potentially buy from you, right? And so it's just to think about, like, where I think about this all the time with our business. I'm like, where are my customers at right now? Where are they hanging out at? Mm-hmm. Who are they with? Who are they talking to? Like, that's how we target some of our marketing for online stuff, is like, what group are they in right now? Whose other training programs are they a part of right now? And just think about that for real estate as well.
It's tactical marketing, right? You're trying to target you want certain types of customers that are going to match with you. So you're just target marketing them, right? I mean, It's the smartest kind of marketing to get the best results with that.
Yeah. And sometimes it's through agents too, right? I know you contact local agents and just say, hey, do you know anybody that's buying? And you find a way to work with them as well.
Absolutely. And most of these properties we get are listed, most of them, not all of them, but most of them are listed. So that listing agent gives me great information. Like, let's say the property was listed for 89 and I'm picking up for 49. And they say, well, we had cash offers for 62,000 on this property before. I'm like, all right, find out they're interested. We utilize them, pay them commission and just sell it. And we never had to do any kind of marketing whatsoever. Right. They did it for us. They get paid the commission on it and we're happy.
Yep. So talk a little bit about some lessons learned during the last downturn, or that you can apply now, or that people can apply now in regards to financing.
Oh yeah, financing. So we're in a different world than we were in 2000. We didn't have the abundance of financing possibilities in 2008, 9, 10 timeframe, right? A lot of them have come aboard now, but a lot of them are pulling back now too. So Lima One Capital, who I use to do rental financing, or Lending One, right? They've stopped now. They've stopped doing anything, even on the acquisition side for fix and flips, because they just don't know what's going on. But all of the platforms that did rentals, almost all of them are pulling back. There's still a few guys out there that are doing it. So I'm going to actually reach out to a couple of them this week and find out if they're still lending in my state where I'm looking to do it. But so getting back to your question here about the financing, private lenders, right? We use private lenders like crazy. We still use them a lot. Now, it's harder to find long-term lending with private lenders, but maybe with this change in the market, people will want to lock in for a little longer term. Maybe you can get a 2-year ARM or 5-year on some of these different properties at a decent rate there. But there's going to still be other property or other financing sources available, and new things pop up. As soon as this COVID-19 is going away and things open up again, I think these lenders will be back out there a little more active again too. It's just the uncertainty. I get why they're pausing, because if they're lending now in today's values, and 3 months down the road, the values drop 20 to 30% in these different markets, they don't want to be caught like that, right? So they're going to pull back everything.
Yeah, and some of the big national lenders, they make loans and then they immediately resell them, right? They package them up and resell them. And so I think that whole kind of supply chain, if any piece of it slows down or stops, then the whole thing stops. And that's kind of what's going on. As the time we're recording this, that's what's going on. That could change. Like I know, we know several of the big hard money lenders, and they've made dramatic changes from one day to the next over the past couple of weeks. So, that could loosen up today or tomorrow, like just because they have more clarity of that whole supply chain. So you never know.
You never know until we have some kind of certainty out there in a market. It's going to be like this for a little while.
Yeah. The good thing about private money lenders, though, we've talked to, April Crossley, who's a Investor Fuel member as well. She talks a lot about raising private money. And I've had her on this Flip Nerd segment that we're doing live here 3 times a week right now. And she shared it a few times, is that, there's a lot of private money lenders that are more interested now because they just got hammered in the stock market. Yes. And so they're like, hey, maybe in my mind, I was getting higher returns in the stock market, but look how unstable that was. So 6 or 8% sounds pretty good to me right now.
I think you're gonna be able to find a lot of private money now over the next few months. You're going to find a lot, because people need to shift their money into something, and just want to leave it in the bank and earn 1/4% or 1/8%.
Right.
So why not earn 6 or 8% in something a little more stable, right? Backed by something here. So right. I think people will I think that's going to be a big opportunity for us. It's something I'm going to be attacking more over the next month or so as well.
Yeah. That's another thing is I know you use private money, and sometimes, and without getting too personal here, sometimes you have to question like, hey, I'm glad I have private money. You have to look at your base of lenders and say, am I diversified enough? Like maybe I need more of them. Because we've all had this issue, or a lot of people have had this issue where they have all their eggs in very few baskets. And if like one main lender like decides to pull out or sit on the sidelines, then it's like, what'll happen to you then? How will you respond to that? And so it's kind of important to get out in front of it, right? And say, okay, I have a risk point here because I'm super reliant upon one person. And if they change their mind, which you have no control over, that could impact your business in a negative way.
Hugely. And I do have, luckily, I'm fortunate enough, I have a few private lenders, but I still need more, because I did have one of them pull back a little bit. The other ones, they're so comfortable with me. They're still, if I've got deals, and they're low dollar amounts too, a lot of these, that they don't mind still doing them. And as I tell them, I reassure them, I'm being even more conservative now than I was 2 weeks ago, right? The deal, it's got to be a great deal, or I'm just not interested in it at this point, just because of the uncertainty going on. But you need to continue growing your private lenders, right? And finding other sources out there, because there's still some cheap capital sources out there. And there's still going to be guys that are active even during this time, especially in different parts of the country that aren't hugely affected. Like you guys are not as affected as bad, and other parts of the Midwest not affected as bad. Right.
And I think, I don't know the details behind this yet, but sometimes local banks, so I borrow for most of our rental financing is through a local community bank. And I have not talked to them. I need to actually put a call in and talk to talk to the president. The good thing about smaller banks is you get to talk to the president, right? Yeah. And so, and you can get some insights to the people that are actually making decisions. But depending on your market, and I know like this specific bank that I use, they don't sell their loans; they keep them in house. So they're not worried about, can I package these and sell these? They're more worried about the underlying collateral, right? Like, is something going to happen there? And so, given that, I think, don't quote me on all this stuff, but I think banks are lending at like 0.25% of interest from the Fed or something like that right now. Like
Yeah.
if they're still lending at 5.5%, 6%, a community bank, like their spreads actually have widened right now. So the question is are they, how risk averse are they, right?
Yeah, that's the
Yeah.
truth. But yeah, that community banks are great for that. And like I said, I first started working for community bank, and we held everything in house. We did
Right.
everything. If we're doing big deals with big businesses, we just did a syndication and joined with another bigger bank to help offset some of that risk there. So for the rentals, I think that's what you're doing. The community bank, it's probably the best way to do it.
Yeah. Yeah. I think I'll tell you during the last downturn, what happened is we built relationships with 2 local banks, and they weren't lending to anybody else. They would regularly tell us like, we're not lending to any other investors right now, but we're going to lend to you. So in one instance, it was through a friend of a friend. Like we knew somebody there that got us in the door to talk to them. And then we had, Brandon Smith, who's in Investor Fuel as well.
Yeah.
He's taught us a few times on this idea of the banker's Bible. So like create this book, this binder of all the deals you've done, pictures, your financial information, like kind of show your portfolio to say, this is what I do, and this is how we can be partners. Like I'm a legitimate, it's like your resume, which is brilliant,
It is.
right?
Yeah.
So we had something like that way before I ever even knew Brandon. It was a little more simple than what he has shared, but it was like, here's our last, 20 deals, our last 50 deals, whatever.
Yep.
Here are the P&Ls for them. Here's before and after pictures. And it's so unique that somebody does that.
Yeah.
That's how we got that. That's how we got our foot in the door, is they were like, nobody's ever done this before. And you just differentiate yourself by saying, look, I'm not as risky as you think I am. Here's my business,
Yeah, you make
That
yourself
was
stand
one.
out.
That was one. And I'll give you guys, without getting into tremendous details here, if you guys are listening right now, that's one way to get your foot in the door. When banks say they're not lending right now, or they're slowing down, or they're going to be more selective on who they partner with, like do something like that. Like that really separates you, right? So it kind of gets you on the top of the stack of people they're considering for sure.
Yeah.
The other thing we did was, and I can't remember who told me this, but usually people would call a bank and like, hey, you guys happen to be lending right now? And they're like, no, we're not lending right now. Call us back in 6 months, or, whatever. We don't lend to real estate investors anymore. We were kind of hearing all that.
Yeah.
And somebody's like, you know what, go to this one bank, because they do work with real estate investors. They're apparently not taking on new customers right now. And they're like, just go put like $10,000 or $20,000 on deposit. Just like literally just open an account and put it in there, and then ask to talk to the president. And we did it. And he's like, yeah, you're a new customer. Why wouldn't they talk to you? Right.
Right.
And so then we started to explain what we do, and without necessarily asking like, hey, I just did that so I can get a loan, just starting the conversation. And they were really intrigued. At that point, you're a customer, so they're going to listen to you. And, if it didn't work out, you could just go take it out of there a week later.
Go to another
try
one.
Try the next bank. But, it gets their attention. It's like, how do you imagine you're like an actor, or you're trying to get in front of somebody that has a stack of resumes like in front of them like this? How do you get yours on top? That's the question. How do you get noticed, right?
Yeah. That's the key. Differentiate yourself,
Yeah.
right? You created that. Basically, you did your own credit report almost, what you did. Look at my history. Look at what I've done here. Because that's, credit report is looking at your history, your payments, everything. This is looking at history of what you've done.
Yep.
You're proving what you've done, proving it over and over again. And you're lower risk.
Yeah. So Paul, what are you going to do differently exit strategy wise than you've done in the past? Like anything you've kind of shifted to, you've never, you don't really do in those virtual markets. You don't really do a lot of big rehabs, right? You're more of like wholetailing or wholesaling anyway. Sometimes seller financing, right?
Yeah, we'll do some seller financing for the lower price point ones, some wholetailing. The only place I've done big rehabs is in Tucson, Arizona, because I have boots on the ground there, really good agent who has good contractors. But otherwise, I just, keep it basic, keep it simple. I want to turn them as quick as possible. So I'm just going to try to find better deals. Right now, the auction platforms do have an increase of inventory. So I'm hoping I find, and hopefully more motivation to get rid of these properties. And hopefully I find good deals, move them, and just continue doing that and building off of that. So I'm going to continue doing a lot of the same stuff, but we're going to be doing more of a focus. We want to almost look ahead. If we're going to be targeting different markets, like I don't know that we will be, but if say we're going to target St. Louis, Missouri, we'll really start peppering them with to find more cash buyers there and just do more mailers and advertising. I think that's going to be our biggest focus, more in building a bigger buyers list moving forward.
Yeah, that's what happens when you move to a buyer's market. where buyers have more control. You have to find those buyers, right? When it's a sell, the past, like really the past certainly 6 or 8 years, maybe more, depending on where you're at in the country, has been a total seller's market. Like you could rehab properties, put them out at the top of the market, maybe ask for a little bit even above market, you know, and people are offering more than list value. Like that's what's been happening in the seller's market. You shift to a buyer's market and you just, dispositions gets harder. So you need to put more emphasis on finding those buyers who wants to really buy your property.
Yeah, it's going to be much more focused on finding buyers. That's going to be
and by the way, acquisitions is easier, right? Because you don't have as, like we talked about, you don't have as many competitors. So
we always talk about deal flow at Investor Flow. Everybody's worried about deal flow, right? Finding more deals. Now we're going to be worried about disposition, finding more buyers, right? And that's going to be the focus of everybody's job, is to find more buyers at this point. That's what's going to be here moving forward, I think, for a little while anyway, till the market settles. That's
how it works. I mean, you know, you I know you follow the stock market a lot and stuff too. That's how it works. People, when the market runs up, some people sit on the sidelines, they move to stuff that's a little less risky, right? Most seasoned investors just keep shifting. They're like, I'm going to move out of these investments. I'm going to move into bonds right now or whatever. And they, based on market cycles, real estate investors, it's the same thing. You're just shifting between more focus on buying activities, more focus on selling activities.
Yep. And that's the guys who stay in this business for a long time. They see stuff coming, anticipate, and just start shifting. Maybe you shift a little bit ahead, or maybe you shift right with it. But if you don't shift, you're gone. Right, you're a dinosaur, right?
Yeah.
So you got to continue to make changes. I mean, this business, like any business, you got to constantly be willing to change and see what's going on. We look at our business quarterly. I look at each quarter. I do a little short dive, what's working, what's not. And then come June, going halfway through, I really look at what's worked, what markets have been good, what markets have not, what are the profit margins doing here, there. All right, I got to ignore these areas and try to sell to these areas. So we shift. Got to shift.
It's the shift. Hey, Paul. So you've been you're a founding member of Investor Fuel. You and I have been friends for I don't even know, probably five, 6 years, probably anyway. Yep. And you were actually a founding member. You were at the very first meeting when we first started, and so we've been we're coming up on somewhere a little bit under 3 years now. I think 2 and 3/4 years or something like that of Investor Fuel. And so you know, would you mind sharing kind of a testimonial? You've been in the group for a long time. I know you've been a part of other groups in the past before. Just what are your thoughts on Investor Fuel and how it's maybe impacted your business?
Investor Fuel has been great. I have a lot of great friends. There's friends that you and I have known before Investor Fuel, and then new friends we've made from Investor Fuel. And I tell you what, the group keeps growing, keeps getting better. You're getting higher level people in there, and it's great to see guys go in there and they're at one level and then explode to the next level a couple of meetings later, right after they started implementing these things. So it's been huge for that. You've been a great resource for me for the information marketing side here, or what we're getting into with our educational business here too. So, I mean, it's just been tremendous. And you cannot underestimate the power of these mastermind meetings, and Investor Fuel is top notch. Mike, you no doubt run the best one or one of the best ones out there. And I haven't been to all of them, right? But it is awesome. You're on us all the time. You constantly do updates. It's just tremendous. I can't speak highly enough about it.
Awesome, man. Thank you for that. Yeah, it's interesting. You know, we've had a number of members when the market turned down here, or, you know, all this uncertainty started roughly a month ago. I think we're worried about our members. And then from our standpoint too, we're worried about our membership. Like, are we going to lose members because of this? We've actually grown over the past month, which is highly unusual. Or we think it's unusual. And because people said, you know, hey, it's been great getting together every quarter. Like, we love that. But the knowledge that's inside of here, the way people support one another, like, we need that support are more now than ever. People that are coming in, we never even knew before. They're like, you know, I've been thinking about joining for a year and I need this now more than ever. So if you're not part of a mastermind, of course, we would love for you to check out Investor Fuel. If you're not, we actually have another meeting coming up here in just a few weeks. But you really need to surround yourself with people that have your best interests in mind, and you can find ways to collaborate with or share information with for sure. And, you know, there's other groups out there, but, you know, we like ours.
Investor Fuel is great. I'm telling you, at the business, we do so much business within Investor Fuel, right? I mean, with each other, joint venture stuff, different ideas. I mean, it's just tremendous. It's imperative. You must join Investor Fuel.
Hey, thanks, Paul. We appreciate that. So if folks want to, you do have, by the way, you do have an education program. I should point out that Paul you've heard about some of the shift here. He shifted to doing more stuff through online auctions. And all these things go through cycles, right? So I know that you said one thing that was really interesting is that a bunch of inventory has come on the market.
Yes.
Inside of these online auction sites. The reality is there's really been a moratorium on foreclosures for a lot of pretty much every state probably at this point.
Yeah.
So what's interesting though is we've all known there's always this kind of shadow inventory out there. So what's happening is banks are anticipating, hey, we're going to be taking some stuff back again. Let's clear out of this other stuff that we've been sitting on, right? Why would they be sitting on it? Who knows?
Right.
But they're shaking loose like some of the older stuff right now. So it's actually interesting that you said you just got served up like a ton of inventory that's hitting right now. That I was surprised by that, but it's this shadow inventory that's coming around.
Totally. It's definitely it's been talked about for years and years, and they've let it out. And I get why they do that, right? Because they don't want to release all the inventory once, and you're going to have too much inventory and the prices will be reduced. They're letting it go and go as while the markets continue to increase, and they're hoping to increase their profits over time and just sitting on it for a little while longer.
Yeah.
For instance, Zoom from 2 weeks ago was 3,500 was their inventory, and they generally hover between 3,300 and 4,100 per month. They went from 3,500 2 weeks later to 5,800. I have not seen 5,800 from Zoom since they've been in existence. So This is a lot of inventory for them. I'm curious to see what Hudson and Marshall, I know hubzoo.com just increased theirs as well. And I'm sure auction.com as well. I think it's going to fall along the same line. We're teaching people how to do that through reauctionacademy.com. So that's something that's, I think, going to continue to grow, and it's virtual wholesaling, virtual investing will continue to grow.
Yeah. There's a lot more inventory that's going to, we know that there's going to be a shakeout. People are, there's going to be a lot of foreclosure activity. There might be a moratorium on it for the short term, but eventually that's going to work its way through the system. Right.
Yeah. I think in the spring of next year, maybe the summer next year, you'll start to see that inventory increase as they've let loose the moratorium. It takes 3 to 6, 9 months, depending on what state you're in to foreclose. Whether it's judicial or non-judicial state. So we're going to see that increase for sure.
Yeah. So Paul, you obviously teach people how to buy at auction. You've got a podcast, you got a number of things out there. How can folks learn more about you and what you do and what you've got going on?
If they want to listen to the podcast, it's either paullizell.com or thevirtualinvestor.co. And if they want to learn more about REO Auction Academy and what we do there, it's reauctionacademy.com.
Awesome. We'll add some notes down below for everybody to find that out. And I know you've done, well over 1,000 houses. So
yes, yeah.
Paul's got a ton of experience doing this. The interesting thing about you is you've done so much volume, and you work out of a bedroom in your house, right?
It's exactly right. The best thing about this being a virtual investor, I literally work out of my home office, right? I have one full-time VA, my disposition guy, and he has one part-time VA. So we do this pretty controlled, pretty easy, and low cost, which is the best part.
Yeah. Awesome. So we'll add those links down below if you guys want to go check out Paul's podcast or learn more about his education stuff about how to buy virtually. It's an interesting time to kind of really start preparing yourself for this next market cycle, this new market cycle we're going to enter. So it's amazing time to use some of this extra time you have on your hands right now to educate yourself and prepare. I purchased some education program this week, and my wife Lindsay is about to purchase one, pretty expensive one actually, because we know, hey, this is the time, like, let's go back to school right now and prepare ourselves for whatever's next. So good time to do that.
I think we're always doing it, Mike. I'm always buying different products out there. So see something that can work and add to my business, I'm going to add it. Yeah, I think it's smart. Got to always kind of educate yourself.
Yeah, once you're in business, it's an investment, right? I'm constantly investing in things that will bring me a return, right? And so you got to look at it.
Totally.
Awesome. Well, Paul, thanks for joining us today, my friend.
Thanks for having me, Mike. Always I really appreciate it. Always good to see you too.
We'll catch up some more soon. Everybody, hey, thanks for joining us for today's show. Hope you got some value here. This is not the time to sit on the sidelines. This is the time to start gearing up and preparing for whatever's next. I can tell you guys, honestly, I don't know if I'm not bragging about this, but I've probably been working more and harder over the past month than I have in recent months, just because we're going through a transition. I'm not going to sit on the sidelines and wait to see what happens. I'm going to basically prepare myself to lean into and take advantage of, benefit from, and help those around me benefit from whatever happens next. So I'd encourage you guys to do the same. If you haven't yet subscribed to this show, you can get access to all of our shows by visiting investorfuel.com. And you can also find all of our shows on iTunes, Stitcher Radio, Google Play, YouTube, wherever you might be watching or listening right now, wherever you're watching or listening right now. If you haven't yet, subscribe, give us a positive review. We'd appreciate it. And we'll see you on the next show. Are you an active real estate investor? If so, and you want to latch on to the power of surrounding yourself with over 100 of the nation's leading real estate investors, all committed to building stronger businesses and living richer, fuller lives, you should jump on a call with us to learn more about Investor Fuel. Simply visit investorfuel.com to get started.